What's going on, you guys, and welcome back to TTC. This video that you're about to watch is actually just a snippet from our weekly trade reviews that we do every single week. And in this one, you'll see me testing out some new things with my strategy. So hope you guys enjoy it. If you guys like this kind of content, definitely leave a like down below and subscribe. And yeah, enjoy. Yeah. So yeah, these are just all the pairs that I'm looking at. US 30, Nas, the S&P, gold, euro, pound, NZD, USD, and the NZD CAD. Right. So the only really opportunities I've seen this week, I didn't take any of these trades. I kind of just framed them up as if I was going to take them. But I never actually pulled the trigger just because this week I was testing out a new, I'm testing out me entering on a lower time frame, because usually I would frame up my trades and execute on the 15-minute. But if I'm going to be in the markets less for like a certain amount of time, whether it's 9 to 10, 8 to 10, or however long I'm going to be on in the markets for, I should be there. I should execute on a lower time frame. So because of that, this last week I've just been like eyeing setups that I can try to execute that, try to like fit that around. So I saw this play on the Dow. So let me just go back, replay it. All right, yeah. So if you see, we're slightly from the end of last week until this was on Tuesday. So from the end of last week until Tuesday, the Dow was trading pretty divergently on the 15-minute. So you can see I don't know if you can really see that, but it's slightly divergent there, and then you can see that it made a higher high. So yeah, it made a higher high on the price made a higher high, and then the RSI did not make a higher high, which to me signifies divergence. And then, so once we have divergence, I would then go down to the 1 minute, and I am looking for, in order to enter this trade, I would need to find a I would need to find a fair value gap trading to the downside, right? So essentially what I'm waiting for here is a fair value gap, and then a fair value gap where we cross below the 50 EMA, which we actually get right here, and then price closes below the 50 EMA, right? So we actually get this fair value gap right here, close below the 50 EMA. So I would actually put my entry right here. I would enter on the open of the next candle. My stop would be at the beginning of the structure for the fair value gap, and then my target would be these fair value gaps that move to the upside. So if I just let this play out, you can see that we blow through this fair value gap. We don't blow through it, but we arrive at this fair value gap. So these are both two areas where if I was actually in the trade, I would probably take some profit off the table. Probably not this one, just because it's so close to it's not even at 1R. So this one is only 0.7, basically 0.7 R. I would probably look to take a little bit of profit off the table around here, just because it's 2R. So I'd probably take about half off the table there. But my ultimate goal, if everything works out the way that I want it to, it would come all the way to the bottom, where to the fair value gap that really started this bullish move upwards. And then you can see that price is retracing. Let me actually just do this on the 15-minute. and boom, we get stopped out, right? So on this trade, I would have, assuming I follow my rules and follow my rules and then take off profit, then I would have taken out some profit here, and then when I take out profit, I would have locked my stop at break even as well. So I would have locked in about 1% on this trade. So this is what, 2.1%, right? So then I would have got 1.05%, and then I would have gotten taken out right around here, right? So this would have been a positive trade for the week. And kind of going back to what we were talking about last week in the podcast, like I can live with this, just because I can live with it not actually coming all the way down to my overall target and still coming out with a 1% gain, right? So yeah, that's basically the Dow trade I saw this week. As for NAS, similar trade. Let's go back. Again, we were trading divergently at the beginning of the week. So Tuesday, excuse me. So yeah, we were trading divergently at the beginning of this week. This actually all happened on Tuesday. So from about, 5 a.m. until 10 a.m. we were trading divergently. And then that's actually when I was seeing this. And then you can see that there's higher highs. There's lower lows made with price, and then there's higher highs made with the RSI. So then that's perfect indication for me to go down to the 1 minute. On the 1 minute, you can see that we have this bullish fair value gap, and then price crosses and closes above the 50 EMA. So I would enter on the open of the next candle. And then my target would be, these fair value gaps up here that started this downtrend into the divergent structure that's been created, right? So it's unlikely that price will, get here from this specific move, but that's why we lock in profits on the way. So you can see that starts out very well. I would have taken profits. My first area where I would have taken profits is here. I wouldn't have taken profits at any of these fair value gaps just because they've already been reached. So one of the rules in my strategy is that I only take profits or I aim for targets where of the fair value gaps that have yet to be returned to, right? So you can see that all of this fair value gap all the way down here, all of these ones have been returned to in the before this move, right? So these ones do not count. So the earliest one that I could take profit or lock in some profits would be this one right here, and that is about 1.2 R. So you can see that around between 1 and 2 R is usually where I start to lock in profits, which is fine. So I would have locked in a bit of profit here, move my stop to break even, and then let's see how it continues to go. Oh, we got up to these ones as well. So I probably would have locked up I would have taken a bit more profit here. So I would have taken out half the trade here, and then I guess I would have taken out another half here. So half of the half, so 25%. So I would have about 25% still running after this point, and my stops at break even. And actually, I didn't even notice that probably takes me out right there, depending on spread and stuff like that. But let's assume that it took me out, right? So then on this trade, I probably made about 0.8%, if my math is correct. I'm kind of just doing that in my head, but again, it's still not a bad trade. And I'm still trying to figure out my rules, just because, like, if I let this play out, it probably does complete a lot more of the fulfill a lot more of these fair value gaps up here, but the rules are the rules. If I lock my stop at break even, then if this knocks me out, this knocks me out. It kind of is what it is, right? So yeah, that was really it for NAS, and then I have one more opportunity that I saw on GU, on Pound U. So similar opportunity. So from the middle of last week, Wednesday this week actually. Yeah, from Wednesday until Thursday, it was trading pretty divergently. Made lower lows while our side made higher highs. And if you have any questions or anything, feel free to, stop me.
I'll ask him at the end.
All right. So yeah, I would go back here actually, down to the 1 minute. I think I might actually, hold on, we'll see, because there is after divergence is created, there is a fair value gap forming here. And then if we cross the RSI, not the RSI, the 50 EMA, and close above it, so it would actually be entering there. My entry would be there, and then the fair value gap was there, so I would put my stop here. And again, I'm aiming for ultimately these fair value gaps up here, but that is a 5R move. May or may not happen, may or may not play out that way. And so that's why we take profits along the way, right? So my first area where I can look to take profits, first area where I can look to take profits are these ones, on these fair value gaps right here. It falls within my rules because it's different than the other ones, because these ones created fair value gaps moving to the downside in this move, whereas on the NAS it didn't. So yeah, that's why I can take profits at these ones. I probably wouldn't take it at either of these, again, because it's still less than 1R. So I would wait till at least 1R, and that one 0.9 still not 1R. So the first one I would probably take profit is right here, about 1.5. So yeah, let me just let it run, see what happens. So yeah, take some profit here, lock my stop, take a bit more profit here, lock, and then I would just, I'm not moving my stop anymore. I would just keep my stop where it is, and I'm out, right? So pretty quick trade. Yeah, that's about it, to be honest. I'm also like working on like re-entries, because this is still a valid move. Just because I made a bit of profit on this move doesn't mean that there couldn't be another valid movement. So like you can see right here, there's another fair value gap created, although it's small, but it is another fair value gap which falls within my rules. And then let's say I do re-enter, I could as per my rules, I could enter right here, stop here, and still I'd be targeting the same areas up here. But again, I'm still working out the kinks of the strategy. So yeah, I would be taking some profits, probably not here because it's less than 1R. So yeah, I'd probably take my first bit of profit here, lock my stop, take more profits here, and then again take some more profits up here, and then I'd probably just after I'm trying to develop a point where I would just lock my stop and just let the trade run. And I'm actually curious what you would think with that, just because I haven't really done that before. I'm not sure if you've kind of executed anything along those lines, but yeah, so on that front, I'm definitely looking for some guidance. But in a nutshell, that's my strategy. Those are some of the opportunities that I just kind of wanted to go over and run by you.
My first question is, why do you like the fair value gaps?
Because I think that they're strong areas that price returns to quite frequently, and price trades around those areas quite frequently.
Yeah, I like them too. I was just asking.
No, yeah, just because like, and even I have this this indicator on. You probably noticed that it visually shows fair value gaps, and you can see that the amount of times that they get filled. So the bullish amount of times that they get filled, the like bullish fair value gaps have been filled 99% of the time, and the bearish ones have been filled 96% of the time. That's a pretty hefty, like that's just math. You know what I mean? Like 90+% of the time, these fair value gaps are being returned to. So if you could find a way to trade around them, it's pretty astronomical. And I've seen a lot of as long as you can trade it right, especially with the way that I trade. If I can trade it right, I've seen a lot of profits. I've seen it work very well for me, and I just have to analyze it correctly and get in at the right moments and things like that.
And then for your divergent style of trading, is it like more like reversals, or is it like pushing into trend, or just like calling like hitting the tops and the bottoms and kind of like playing pullbacks? Or
yeah, I'm mainly just playing pullbacks. I'm not too so for a strong majority of the time I was trading reversals. So it would be, let's say that this was a very strong downtrend, which it actually kind of is. Then I would be at the bottom of this downtrend, and then I would find divergence at the end, and then I would just look to trade the reversal back towards the beginning of the downtrend, right? But now I'm kind of just I'm not too concerned with the overall trend, just because I'm trying to get in and get out. I can make my profit whether it's a reversal, whether it's in trend, whatever, you know what I mean? As long as there's divergence centered around fair value gaps, I found that I can make my profit and get out.
As far as like trailing stops, honestly, like when I've done it in the past, it just, I don't know, I take more stop outs, I feel like, than is necessary. Like a lot of the times it doesn't come back to my entry level or my original stop level, and then we'll just continue higher in the direction that I was trading. So it's like I'm getting more into the idea of just like set and forget trading, which I'll get into with my trade that I did this week. But it's like, I don't know, it's just like, it's kind of like this mental pull between, okay, well, what's going to make me feel good mentally, right? It's like, am I going to be able to like go about my day better if I'm just like locking in my stop and then kind of like trailing it along like a structure kind of standpoint, or can I just like leave it alone and just take whatever's given to me, whether, like you said on that other one, like you might have getting stopped out at break even or not, like just take whatever it gives you.
Oh, on the NAS? Yeah.
Yeah, so it's just like, I don't know, I guess that's my best answer, is like, just do what feels good.
Yeah. So I actually saw this one trader, it was just a random video, I forget what his name is, but he was saying that like one thing that he does is he kind of just lets it run until he gets a red candle, which I guess is an interesting way to do it, especially if it's kind of just like ripping and running. Like let's say in this large move, it's kind of just ripping, and then until he gets a red candle, which would be this one. So he would stay in the trade, stay in the trade, and then I guess on this candle he would exit. You know what I mean? Which isn't a bad way to do it, but again, you're still leaving money on the table. So there's pros and cons to each. You know what I mean? So I'm still trying to figure that part of my strategy out.
I mean, you could always kind of keep it simple since you're entering on the break of a 50 EMA. You could exit on the break of the 50 EMA, or consider like.
I didn't even. I didn't even like think of that. That makes so much sense. Like, so here would be my stop, or my exit, right up here.
Yeah.
Or I guess a little lower. So like right there, which is that makes a lot of sense. I'll start testing that actually. I'm glad you brought that up. Thank you. Actually, let me write that down. I gotta write that down.
Yeah, of course. Like sometimes it's just the simplest stuff. You know?
Yeah, like I don't know why I was just overlooking that. Like that makes too much sense, I guess, and I just didn't think of it.
It's like, how do you get out? Well, it's your entry signal in reverse.